go right into the action because I didn't see where everything closed, so we'll look at it together. All in all, S&P cash, I still think there's a lot to like. I still think it's constructive. We remember this little, pre-election sell-off, the bounce back. Here's when Donald was elected to be president, and this was the most important 4 days thereafter, and then boom. So here we are, came into the 21-day at the end of December, and then popped right back above it. Do I think it's the end of the world that we didn't break out and go? No. Are we still above the 8-day? Yes. Are we still above the 21-day? Yes. So at this point, an inside day, a digestion day, ahead of President Obama's last speech tomorrow, and then President-elect Trump's first press conference. So anyway, at this point, I don't think you can get too bearish again unless we break below like this 2260-ish. So micro, short term, this is your spot. So all in all, this is not the end of the world. Okay, I'm sorry. All the bears are calling it the end of the world, but at this point, it's just an inside day. What could be a little bit of a problem, okay, I think a little bit of a problem could be that oil stocks, have been showing relative weakness, so they're not a tailwind right now. They're a bit of a headwind, but they're not broken. They just lost momentum. So let's not be in the XLE until it gives us another signal. This happens from time to time with the XLE. Okay, it's not broken. It's not macro lower, but you know what? It broke the 8 and 21 day, broke this inside range. So don't be long XLE. The oil stocks have not been acting well. Okay, at some point maybe it'll come to the 50-day and test this gap if that's the case, and you could try and rebuy it. Well, not everything is just going to make new highs all the time. Some sectors do, some sectors don't. At this point, this inside range broke to the downside, so don't be in it for now. We'll see if weakness persists. If it does, chances are the Dow's not going to get going too much, but this would be more of a spot that I would look at, and it could be an opportunity. In the small cap arena, little bending going on, not broken, not leading, but it's not so bad. But at this point, I would just be out of the way here. Don't be in the IWM until all of a sudden it wakes back up. Okay, at this point, the 50 days all the way down here. So I guess if we are going to get a pullback, it looks as if the XLE and the IWM are the weaker ones for now. We'll see if that persists. The banks were a little weaker also. FAS did not break out and go and have four bars to the upside like it did here. Look, remember this breakout? Wow, look at that. Boom. Now it's taking its sweet you-know-what time. Here's your upper pennant, still above, not leading today. The bank earnings aren't until Friday, so there's just not a whole lot of catalyst there. So the FAS, if you're in it for momentum, maybe you're a little light. If you're in it as a swing versus the December low, you're just fine. It might shake things up, it might not. But all in all, those three things right now are what the bears are pointing to. But then on the trading side, I think the tech is acting well. We've been focusing there. Okay, if when oil's not acting well, so if something else wants to grab the baton, look at this move in the Qs. Look, remember this little spot that I put for you guys on Redler All Access last week? I said if we can clear this, it's constructive, could put it on its way back to highs. And now look, above the 8 and 21 day. Remember, it was breaking down here, and everyone would say, oh my God, it's getting to the 50 day, it's broken, tech's leading us lower, and then boom. So don't start just shorting everything because the IWM, the XLE, and the FAS aren't, in blockbuster mode. Not every time. Things aren't just in blockbuster mode all the time. You know what else I think is constructive? The IBB. Right? I was long last week. I did not go back to it, but remember when it took back the moving averages here, then took back the 50-day, went above the 200-day, and now some flows went to the IBB. So go where the money's going if you're a bullish type of trader. So at this point, I don't know, maybe it gets back up to here. This would be nice, right? That would be a big move. At this point, this small little downtrend that broke above, so acting better. I think we were in it from here to here. I just didn't go back to it. That's why you kind of always want to, if you're in something for a swing, don't try and be over cute. You know how I've been trying to time the high beta tech names and trying to be perfect. Well, this year I'm trying to be a little less perfect and sit through some stuff. All in all, you look at something like Amazon, nice inside day today. The time to be excited, like I was, like I think all of us on Redler All Access was right here when it took back the 50-day. Nice move. 2-day move into day 3. All in all, though, nice inside day. If we get another inside day, I think we can get another nice juicy move, and the next time could be to fill this gap. So at this point, Amazon still looks really good. I traded it a few times. I'm still in the options. I'm not exactly sure if I'm in the stock yet. I had a bid in to buy it lower. But all in all, back above the 50-day, it's a little extended, little sideways action, and that can go again. Google also, big move. Didn't fall apart today, showed some relative strength. For those of you that are still in it from when we said it could reclaim 804, why was that important? Because again, this was your overthrow down, and this showed you that, boom, right back on the map, held it, and then on Friday, you had that move above 814. So now all in all, holding very well. This looks good. At some point, it seems like this is going to happen. It's going to take this out and go. I'm not in Google. I got out of it on Friday. But what I am still in is I'm still in some Apple. Okay, Apple, to me, it's 3 days up, so I have less. Nice move here. You know, a few nice moves. This is actually, everyone's like, Red Dog, is that a Red Dog reversal that we saw in Apple in the beginning of the year? I'm like, you guys know what a Red Dog reversal is. What is that? Okay, came in from 118, went below 115.43, came back above it. That's your buy. Nice entry one. Then it clears this small pennant strategy. That's your buy number two. And now look, you trim some. Overall, though, the macro pattern is getting better. Morgan Stanley said it's their 2017 pick of the year. I also put that in my report, too, if you read it. We'll see if it can get to here. That would be an area, and now it's coming into a little bit of resistance. So this is not where you should be heavy. Time to have been heavy is right here, or maybe with the Red Dog reversal, and then on Friday. Now you trim some, but you can hold some. Same thing like Tesla. I'm still in Tesla. You know, I listed it. I put it on Twitter. I put it on the free Twitter, Redler All Access, when it was here, when you had this nice descending trend line here. Threw it out there saying, hey, Tesla's going to be a 2017 focus. Why? You have Elon Musk on the transition team. Everyone's talking autonomous cars. It's done a whole lot of nothing for a year and change. This is when you want to get excited about it. Took back the 50-day, took back the 200-day, then remember the production numbers, and then boom. Actually, that was right there. And now it's still heading towards resistance. So at this point, you could be small, which what I am, and this is your next point of reference. It's a little bit extended from the 8-day and the 21-day, so not the time to be aggressive. But if you think you're going to sell it and not buy it back, you might as well stay with it. The last real juicy buy was when it was down because of the deliveries, and we talked about buying, and if it went green, buy more, and boom. Okay, and then it even held on that little pullback day. So either way, Tesla's acting really well. So all there's lots of different things going on. It all depends where you want to live. High beta tech and tech has been acting well. It's been a good focus. So now if all of a sudden that wants to take a rest, then we'll see if money comes back to the oil names. We'll see if it comes back to the small caps. We'll see if they start focusing on it. End of the week are the bank earnings. I lost money in Goldman Sachs today. Why? Because I had it overnight, and for some reason it's just not trading well for me, or maybe I'm just not trading it well. But either way, it's still just fine, right? Just driving everyone a little nuts in this range. And here's the range. Hold on, where's my little trusty? Boom. It's still hanging above the 21-day. This didn't really get below this. I don't know why I was so ready to get out of it. I got out of it so quickly, but anyway, it still looks just fine. But we'll see what happens next. Bank of America. Someone said there was very big options being bought for after earnings, so maybe someone thinks it's going to be good. If that's the case, I still think end of the year this thing's 28 to 32. Maybe it happens sooner than later, but it's going to have to clear this spot first, and it's going to have to get through earnings, and so far so good. It's had a really big move. It's consolidating above the 21-day. So again, there are a lot of people saying we're in the last inning of this bull market. Okay, but if you start shorting because we're in the last inning and it goes into a few extra innings, you might not be able to stay solvent. Okay, you might also miss out on a lot of opportunities. I know a lot of people have been saying we're in the last inning of this bull market since 2012. That's why I talk about be long if you're above the 8 and 21-day. Add tier sizes around great chart patterns that are tight, that are expanding. And if you break below the 8 and 21-day, reduce risk. Maybe you get short. And sometimes that'll lead to a move to the 50, the 100, the 200-day, and then maybe even a correction. But there's a process along the way. Sometimes I get out because we broke the 8 and 21-day. A day and a half later, it's back above, and I get back in. I lose a little bit of time and a little bit of money, but at least I was safe, and then you continue to follow the trend. So you got to have your process. You got to stick to it. So far, I think 2017 has been a great trading year for a lot of people who've been looking for patterns, who are part of Redler All Access, who watch the Morning Call Express on the recap, and I hope it continues. And congrats to you if you started off well. You push your own keys. You have to just understand why we talk about it, so then you feel confident doing it, and then you execute. And let's continue to keep doing it. Not fall asleep behind the wheel if we do get they sell the inauguration, but we shall see. Don't listen to everyone around you. Listen to the price action. Right now, I still see rotation. I still see setups, and there's still a lot to like. And that's that. Bye-bye.